Welcome, and thank you for joining us for today's webinar entitled The Democratization of Wealth Management in China, brought to you by Capron Asia. My name is Paul Robinson and I'll be acting as the webinar moderator. With Fintech redefining the wealth management industry worldwide, it's now quite common for Robo-advisors and ETF-like products to largely eliminate the need for humans. But what about China? Does traditional managed wealth management have a future in the world's biggest country? In this informative 45-minute webinar, we'll look to answer that specific question, discuss the critical trends, and provide insight into what is happening in China's wealth management market. Now, I do need to inform you that today's webinar is being recorded and is run in listen-only mode. However, we want to encourage feedback and questions from you throughout the webinar. And since we always get lots of questions, we're going to get through the presentation in approximately 30 minutes. Then we'll spend about 10 to 15 minutes in our question and answer session. Now, to facilitate this discussion and the question and answer portions, we're going to use two features of the webinar software. The first is the viewer window, where you'll see the presentation. I recommend you maximizing that now so you can see it in full screen. The second is the control panel, where you can interact with us. Now, this control panel can be opened and closed by clicking on the arrow button on the Grab tab. In that control panel, you're welcome to submit questions and comments to our presenter. We'll be answering as many of these as possible throughout the presentation, and of course, as I mentioned, at the conclusion of the webinar too. Now, our presenter today is Dennis Suslov. Dennis is joining us from Capron Asia's head office in Shanghai. As one of Asia's leading providers of independent research, custom consulting, and advisory services focusing on the financial industry and financial technology, Capron Asia helps clients understand and navigate the challenges they face in a challenging region with a rapidly changing business, operational, and technological environment. Now, with all of our housekeeping out of the way, let's get started. Dennis, please go ahead.
Hi everyone, thanks Paul. Today I'll be talking about wealth management in China, and this webinar is based on our recent report of the same name. Alright, first of all, I would like to introduce the way we define wealth management. So the way it's defined in most countries, it is an investment discipline that incorporates financial planning, portfolio management, and related financial services. But in China, wealth management, when people talk about wealth management, they often mean wealth management products, which are investment products sold to retail investors through banks or online. And probably the main feature is a very low investment minimum. We'll talk about this in more detail later, and this was a short introduction. First of all, I would like to introduce a bit of background, how the products evolved and how China's financial industry came to the way it is today. So before 1990, there really were not that many investment products available. There were bank deposits, there was insurance, and government-issued treasury securities. Probably the main problem with these products were pretty low interest rates, and these rates were set by regulators, so they were not really market-driven. So, and as a result, financial system didn't work as effectively as it could. Stocks were first introduced around 1990, when first in Shanghai and then in Shenzhen, stock exchanges were created. And for a decade, it was one of the most popular investment ways. And then around 2001, first mutual funds were launched. Later, they were joined by bank wealth management products. And these were really a big step towards modernization of the financial industry. It's important to note that rallies, stock market rallies, were important factors that drew a lot of new investors into the markets. The first one happened in 2007, and the second one happened around 2015. And this really was the time when a lot of new investors saw the potential of stock market investment and join the market. And the last era that we have here is, it started in 2013, and we call it the democratization of wealth management. It started with Yule Bao products launched by Alibaba, and we'll talk about what these products are later. But first of all, let's take a look at the whole asset universe that is available in China. So as you look at this risk and return matrix, you see that you can see that people can choose from very low risk, low return products like insurance or money market funds, or they can invest and buy very risky products like forex, futures, P2P. So there is a really wide array of products available, which is great. It shows how financial industry evolved in China over the last 30 years. All right, but let's see how investors actually use these tools. First of all, we'll talk about high net worth individuals, because they often have access to qualified advice, and with deeper pockets they can buy and try new products ahead of retail investors. This chart on the right shows how domestic asset allocation changed over the last 6 years. So we see that cash proportion of the whole portfolio has decreased. It was around 1/4 just as recent as 2009, and now it's just 12%, which shows that high net worth individuals do not want to hold this very traditional and conservative and low yielding asset these days. At the same time, alternative investment has grown up to 25%, as did equity. So right now the portfolios are more diversified, more balanced, which is a good thing. But how these high net worth individuals actually invest? Well, we found out that private banking is much popular right now than it was just a few years ago. And high net worth individuals increasingly look for professional investment advice. This is mostly done by commercial banks here in China, not by family offices, but by specialized private banking branches of commercial banks. Right. But let's see how retail investors do that. Well, we found out that there's a huge change in how retail investors manage their money. There was a huge growth in Fintech, and we would like to mention a number of reasons why this happened. So the pretty high smartphone penetration helped this. 2010 smartphone penetration was quite low. It was around 6%, but now it's around 70%. It will be growing gradually, and this really helped the transition towards mobile, these wealth management platforms. People use their mobile phones to manage their wealth, and this was especially helpful for non-advanced computer users, because smart mobile phones really simplify the process. We will talk about this later in a bit more detail. And also in certain rural areas there is no broadband cable internet, or some users just don't have a computer. Maybe busy blue-collar workers or actually white-collar workers use mobile phones to manage their wealth too. This might seem surprising, why people wouldn't use their desktop computers, which have feature much larger screens, have full keyboard and mouse, while mobile phones are very small, have very small screens. But actually the convenience of a mobile phone really was an important driver of this switch. As you see in this photo, a lot of office workers use their mobile phones during their commute. And these days, they often don't even go to a normal supermarket to buy their groceries and products. They just order everything online. So why they would go to an insurance company office or fund management company office if they can do the same online? So it's much more convenient, and it really has driven the demand for mobile phone wealth management. So the advent of mobile was the first factor, and the second factor is distribution, the power of distribution. So in the past, when first mutual funds and then bank wealth management products came along, there was a bit of a bottleneck in distribution. Asset management companies were creating these funds, but they didn't have distribution power. So they cooperated with banks, which had a lot of branches all over the country, had salespeople that were selling these products. But because there are only 4 of the very large banks in China, there is a bit of monopoly. And because they were not really interested in having too many products, there was a bit of a bottleneck in distribution. And then digital platforms came around and started distributing this. So first there were payment wallets like Alibaba's Alipay and WeChat's, and because these wallets have really large user base, they were very successful at distributing. And after that, seems like everyone in China became involved in fund distribution. All the technology giants do that, like JD.com does that, WeChat does that, and if you compare to other markets, it's quite different. For example, Amazon does not distribute funds in the US, nor does Facebook. But in China, it seems like it happens exactly this way. JD.com, the e-commerce giant, distributes funds quite successfully, as does WeChat. So this was the second factor. The last factor, which we think was very important, even though it might not seem that from the first sight, is the experience in user interface design that the technology companies had, and they really brought it to the table in terms of building out wealth management distribution. If you look at this slide on the, if you look at the screenshot on the left, you see that it can be quite confusing. This is a screenshot of wealth management platform from the world's biggest bank, the ICBC Bank. And there is just too much information, in my opinion. There is a type of currency that you use to invest. It shows the type of funds, minimum price. So there is just too much information, and there are too much funds on display, which can be quite confusing as well. And on the right, the smallest screenshot on the right shows wealth management app developed by Tencent, and we think it's much more streamlined. So there are a few products here. It shows the interest rates very clearly, and it might seem very simple and a small difference, but actually was one of the main drivers behind making these mobile platforms very, very popular. All right, and now I would like to talk about Bao products, which were one of the first that were distributed mobile, and they were really important. So how did these products come around? Alipay saw that many of the users of its wallet had some residual funds, and this money was just sitting there. It was not bringing any interest, And the company realized that if they can create some kind of investment channel that can bring users some interest on their money, they will use it. And they were incredibly right. If you look at the chart below, you look at the AUM of Yule Bao, you see that it grew substantially. It showed amazing results from nothing in second quarter of 2013 to 800 billion RMB in 2016, which made the fund management company, which helped Alipay to do that, the Tianhong company, to become the largest fund management company in the world by AUM, and even one of the largest in the world. And why these Yule Bao products were so successful? Well, first, they have very low investment threshold, just a few RMB is enough. You can invest with as little as 1 RMB. And also, it features instant cash out. So it was so convenient that people could invest and then use this Yule Bao money to buy anything online, which is yes, it's instant cash out. It's very convenient, and basically it's money that you can use, but that brings you interest. It certainly was very innovative. And this was the first product, and it was developed by Alipay in cooperation with Tianhong Fund Management Company, which is an asset manager here in China. The funds were, in the end, the funds were invested in money market funds, but then they expanded their offering and started offering many more different kinds of funds. There were fixed income, there were time deposits, and other products as well, like insurance and even equity investments. And these came from a number of asset managers. Later, obviously, the competition joined in, and companies like WeChat and JD.com, Tencent, and Lufax started distributing these products as well, making this investment universe much bigger. So Yule Bao products were really just the first step in this process, the process that we call democratization of wealth management, which means that more investors now have access to investment and managing their wealth, and they can take more part, make more decisions in this area, and be more active investors. The second level, the next level that came after Bao products were P2P products and crowd investing. So both these investment channels eliminate some kind of middleman, and as a result remove the costs associated with a middleman. P2P eliminates banks, and so P2P investors can essentially become bank loan managers and invest directly. And crowd investing eliminates venture capitalists, a profession that requires a lot of experience and education in accounting, finance, and investment. And retail investors can now do that. They can go to this crowd investing platform, take a look at the options available, take a look at the firms, entrepreneurs, and choose one and invest and hold equity. And then if the investment becomes successful, benefit profit in quite a substantial way compared to many other products. And here is an especially interesting product that I would like to talk about. This is not exactly aimed at retail investors because the minimum investment is around 1 million RMB, so it's more for mass affluent investors. and it allows mass affluent investors to take part in one of the taking private and then relisting deals that were happening recently. Many Chinese companies listed in the US realized that they can list back here in China, issue A shares, and the valuations would be much higher than in the US. One of these companies was Qihoo 360, which is an internet security company. They have browser, they have an antivirus and other related software. The company was founded in 2005. It had a successful IPO in 2011, and then just in 5 or 6 years, the PE ratios changed significantly. So the PE ratio for Chinese firms dropped in the US and increased here in China at the same time, and it was quite profitable for many companies to release here again. So why I'm saying this is I would like to show you how complex this deal is, and yet thanks to this distribution websites like jfz.com that this particular product was listed, it allows mass affluent investors to take part in very quite complicated deals like that, and they can be actively involved. Though previously they would just give their money to a private equity investor, to a fund where a general partner would manage that, and now they can go and take a look at the deals and make investment by themselves. So this is one of the examples of democratization, which here means investors have more power and more decision-making power than they had before. All right, so this was about the current situation, but what about the future? Let's talk about high net worth individuals first, and what the future has for them. So for them, more and more of high net worth individuals will realize the importance and advantages of having their money managed by professionals. Recently they were managing by themselves or having their friends or even family members do that for them, but in the future more and more of their assets will go and be managed by professionals, done mostly by commercial banks. There are brokerages and fund management companies here in China that also have private banking capabilities, but commercial banks are still leading here. So it's a little bit different from other markets where the family offices and professional wealth managers. At the same time, sophistication of these investors is growing, especially since the new generation of newly rich is joined the ranks. Previously, the business owners from maybe manufacturing and similar industries were the main part of high net worth individuals in China. But these days, increasingly, business owners from high tech, from IT, and similar industries are joining, and they have very high requirements in terms of investment. They're very sophisticated. They want more complex and better products like trusts or hedge fund investment. And this means an opportunity for providers, for wealth managers who can provide these services. And we saw that demand for overseas allocation is growing too. It grew from just 20%, it almost doubled up to 40% since 2011 to 2015. And this will continue because investors here in China are concerned about depreciating RMB, and they become more aware about the benefits of geographical allocation and diversification. and they learn about diversification into other currencies too. Also, for them, wealth preservation is becoming more important than wealth creation. A few years ago, these high net worth individuals wanted to see their wealth increased in a substantial way, but now wealth preservation is their main objective, which means that they will pursue a less aggressive investment style. All right, and now let's talk about retail investors and see if the situation is different for them. So in terms of platform, wealth management is moving online, first of all, and of course to mobile platforms. These examples of some of the most popular platforms on the right, of Lufax and Tencent's wealth management platform. Also, these investors are becoming sophisticated too. They try P2P, they try to invest a little bit abroad. There even are exchanges that allow trading of exotic assets like art and ceramics and collectible stamps, which is a new thing because previously art investment was only available to high net worth individuals, but now because these maybe pieces of art are separated to small lots that can be traded, basically allowing retail investors to benefit from appreciating art, which is just one of the examples of democratization that we talk about here. And this means better diversified and often more profitable portfolios. At the same time, of course, there is still high risk from certain products. There was a number of bankruptcies of P2P platforms here in China, and some of that will likely happen in the future. In terms of objective, wealth creation is still in high demand. Expectations about profitability of investments are quite high here in China, and investors are really looking for investment channels that bring very high yields, and that means that they are willing to take risk and invest in some very risky products like P2P, which might be not optimal. And because they invest in themselves, we see that private banking or assisted wealth management will not become popular or just for retail investor, even though there are some robo-advisory companies that are entering the market. But we are not sure about the uptake that these companies will have. All right, so let's summarize what we talked about here. We talked about the current situation, talked about the future. So the main trend is democratization. Many products, many investment channels that were previously available to high net worth individuals are available to retail investors right now, and it's very good. It means that financial inclusion is more widespread in China. More investors can have access to the capital appreciation of their investment, and that's good for them, and that's good for the economy as a whole, because money are allocated in a more efficient way. So here I would like to finish and maybe go for questions if we have any.
Hi, this is Zenon. We had some audio trouble at the end of our webinar on wealth management, so we decided to take some of your questions and answer them now. This recording will add to the end of the webinar so you can watch the webinar again as well as listen to the answers to the questions. So I have Dennis here with me, and Dennis, let's go through some of the questions that we were asked on the webinar. The first question that was asked by June was, what will banks do to compete with the platforms? So you obviously talked about these digital platforms that were coming into play. What will the traditional banks do to compete with them?
All banks invest into their own online distribution platforms. First of all, like design improved a lot. We saw those screenshots, and the first one is a little bit old, like from a couple of years ago. Recently, ICBC had a new version, so it looks much better. So in terms of design, and all the banks also can compete by price because of the large scale and their good relationships with these creators of funds. They can offer better rates, basically.
Interesting, okay. The second question we have is from David. And so David asks, what is the private banking fees in China? And what is the cost to invest online? So I guess, what is the traditional cost of private bankers, and how does that compare with some of these digital platforms?
Well, private banking, like these fees differ from bank to bank, but there's definitely a fee applied to assets under management. While these platforms that we're talking about, they don't charge directly, but of course there is a percentage that platform charges from investment.
What about, there's a question here from Susan, and so Susan was asking about the robo-advisor market in China. I mean, that's obviously something that's big in other markets. How does that look in China?
Well, robo-advisors, a lot of robo-advisory companies are entering the market. We saw some of the international players and domestic as well. There are small individual startups, and there are robo-advisory platforms developed by market leaders, such as crowdinvesting, which is a very large wealth management company. So right now everyone is getting in, but the uptake is like, it's not that clear. Probably because it's very new, and many investors really prefer to be active, to go to read about products, talk about products with their friends, get advice and invest. So how it's working right now, it's not that clear, but there is potential. There is quite a bit of uptake.
Great. So it would appear to be a growing market here in China. The next question is from Jason, and Jason was asking, after so many peer-to-peer lending platforms have shut down earlier this year and last year, are customers getting more conservative and shy about investing online?
Well, it really seems like it's not happening yet. Like investors do not slow down, not becoming shy for investing online. Maybe because there is just not enough of these bankruptcies and things. So people still feel confident, and they are willing to risk to get a better returns. They want to try new products. They want to invest in risky assets. So it really haven't slowed them down yet, I believe.
Okay. The next question is kind of related to that. What is the government's attitude towards the industry, towards wealth management? Is there support, control? What's the policy around that?
Previously, policy was very relaxed, and regulators basically allowed all these companies in this space to grow and for the whole industry to grow and develop. But right now, they're getting in and trying to regulate this a little bit more, related to online finance in general, and including wealth management. So we definitely see a bit more of control, and more of control is coming in the future as well.
Great. Thank you so much, Dennis. We have a couple of more questions, but in the interest of time, we'll answer some of those over email. Thank you again for attending our webinar today on wealth management in China. We hope you found it was interesting. If you are interested more in Capron Asia's products and services, please take a look at our website and look through some of the many reports that we published this year beyond wealth management. We've looked at digital payments in China, We've looked at blockchain in India and a number of other topics that are relevant to you, our clients. Thank you again for attending the webinar today.